IT sector in India, which has not had a very good year. It could inch up to a 6% growth in financial year 25 as opposed to 4 to 5% which was estimated, but hiring will remain moderate. All this information coming by the way of a rating agency ICRA. What is interesting to point out here is that every day that we discuss IT sector, IT stocks they do not seem to be reflecting the same sentiment as many analysts are hoping and predicting for IT sector in India to have, which is a perhaps washout year, a moderate year, and hiring is also reflective of that sentiment. Amid all of this, good news coming in.
I wouldn't really call it good news, Shweta. I would say it is better news than this year. So this estimation of growth coming in at 6% is for FY25,
yes,
which starts 1st April 2024 until 31st March 2025. So it is better news compared to the current financial year, where the IT sector has had a very, very tepid sort of growth at, and the expectation for it to close the year between 3 to 5% each. So a figure of 6% growth in FY25 looking a little prettier than a higher estimate of 5% for this year. Having said that, compared to, let's say, last year, the IT sector grew in FY23 at about 9.2%. So 2 years later, FY25 growth coming in at a 50% decline from 9.2% to about 6% is definitely not as rosy a picture as anybody in the IT sector would want it to be, or investors in IT stocks would want it to be. However, again, having said that, the estimate or the forecast or prediction of a washout year, FY 2025 being a washout year for IT, has also been laid to some rest by ICRA. Now, again, all rating agencies, all analysts have certain, forecasting mechanisms through which there are certain events that are put into the equation, and there are certain events which are still unknowns. So, will this happen for sure? Will IT grow for sure at thereabouts of 6%? Nobody knows, neither does ICRA. But I think a lot of this finding is coming on the back of, again, the Fed announcing in the US that it could look at a rate cut cycle beginning as early as Jan. Remember, their financial year is the calendar year, which is Jan to December. So early next year could mean perhaps as early as Jan or Feb or March. And if that were to happen, then you're obviously looking at the US stocks market doing better, and the money coming back, the sort of cost of raising capital for corporations in the US easing, and with that cost easing, some sort of discretionary spending should take off, and if that takes off, it is obviously good news for India's IT sector. So I think ICRA definitely looking at the Fed commentary, and in addition to that, also hoping that whatever cost pressures that we are seeing on account of oil, on account of rising gold prices, should hopefully begin to ease as the rate cut cycle in the US kicks in. And with that, the sort of discretionary spending for India's IT sector, towards India's IT sector, should take off. But still, the next 2 to 3 quarters,
there's no hiring.
There's unlikely to be any hiring, because even if Fed cuts its rates in Jan or Feb, by the time that rate change trickles down to borrowing for corporate America and then restarting or initiating new contracts for India's IT sector, you could easily look at a 6 to 9 month window. But then that again comes in FY25. So maybe a muted H1 for FY25 for the IT sector, and thereafter we should see some sort of a hiring uptick.
Right, a better next half of FY25 for the IT sector. Well, that is the prediction so far. So that is as far as IT sector is concerned.